please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. As we've been discussing, the stock of the moment really is ICICI Prudential Life. Before I get Abhishek's thoughts on why the market is so excited about these numbers, Ashwani, a quick technical check on this one.
See, it started falling from 500, went down to 370, came back to 450 and again tested 370 before moving up sharply. So my sense is that the bear market here is ending, and if you buy here, your stop is about 370, and it could finally get back to about 500 and beyond. So, the kind of move it's had from the lows, that just kind of shows that some sort of a strong bottom seems to be in place.
Okay, let's now get to the fundamentals. Abhishek is with us now. Abhishek, you were talking about this. What got market excited here?
The value of new business margin, that is the measure of profitability of a new business that comes into the company. Okay. So that margin has increased to 16.5%, and that compares to about 10.1% YOY and 13.7% on a sequential basis. So on a YOY, it has increased by nearly 640 basis points, and on a sequential basis, it is up anywhere around 280 basis points. So value of new business in absolute amount has increased 93%.
16% you're saying?
16.5.
16.5.
16.5.
Versus 10% year on year.
Versus 10% year on year and 13.7 on a sequential basis.
What was the market working? Was there a number that the market was working with?
Market was working anywhere between 14 to 15%. So that is why you are seeing this kind of reaction on the stock, that the value of new business margin has actually come at 16.5%. This reminds me of 3-4 years back when the value of new business margin for ICICI Pru used to be in the region of 17 to 18%. So overall annualized premium equivalent has grown by 40% on a sequential basis, and that has largely been led by the protection business, which grew multifold to about 7,345 crore. Their persistency ratio has also improved. So persistency ratio on the 13th month is at 85.7. That compares to about 81.8 on a sequential basis. The overall AUM growth has been benign on a sequential basis. We have seen that flow into mutual funds have been on the lower side. So overall, quarter on quarter it is up only 0.9%, but YOY it is up 13.5%. Gross premium is up 27% sequentially, but in that it is not the first year premium that has taken the hit. It is the renewal premium which has guided for the growth. Renewal premium is up about 35.5%, and that is why we are seeing this kind of reaction on the stock.
Okay, Abhishek, thanks a lot for that. Yes, that's a big move that you're seeing on that stock. Now, I tell you something. Let's also keep an eye on HDFC Standard Life as well. ICICI Pru up 8.5%. In the past, you've seen that stock also make a big move. In fact, it's making a comeback.
SBI Life, Anuj, just because you mentioned it, I started checking the other life insurance stocks as well. Yeah, Standard Life and SBI Life. So I guess rubbing off on the others?
Yeah, rubbing off. It happened. Like you saw yesterday, Chola's numbers rubbed off on others. So today you're seeing that kind of move. It's a sector which has gone through a bear market and is moving on now, Surabhi. You remember ICICI Pru after listing went below, of course, then had a mega rally. After that, once again had a big decline, and now once things looking up again. But anyway, BTST time. Ashwani, your thoughts, of course, on the index and also on individual stocks.
Index, in spite of Reliance trying very hard, still range bound. You won't call it it's a big breakout. So we are still kind of slowly inching higher. So still indecisive. But as far as individual stocks are concerned, United Spirits is a buy with a stop of 3,500, target of 3,750. JSPL is a buy with a stop of 249, target of 263. And OIL is a buy with a stop of 232, target of 246.
Yeah, since Ashwani was talking about it, I was just looking at what's pulling down things right now. Infosys and ITC are definitely playing their part. So there's both the stocks at the lows of the day. Infy is now tracking a 3% loss. So that profit taking is just getting a little more exaggerated. Okay, let's get Mitesh's ideas as well. Mitesh, what are you going with last half hour?
Yeah, so Shree Cement is something which I like as a BTST or short-term trading call for 1-2 days. 17,100 or just below that should be a stop. 17,600 should be the target. And I think Yes Bank can be taken as a BTST kind of a call. Keep a stop at 319 for 335 as the target.
Okay, let's take a break on that note. The Nifty is once again now got stuck into that range. 10,620, 630 is just proving to be a massive resistance. And today again.
So still range bound. Some stocks are shooting higher. EIH, you remember that hotel rally from last week? Well, there's some movement on EIH definitely. It's shot into positive territory. But Anuj, what about the market as a whole? And you know, you were making this point when you started the show as well, that we can't say whether this is a clear breakout. Again, getting a bit sluggish?
I think the bulls would be disappointed today, though, once again it reiterates, Surabhi, that this range is intact. Buying on dips is working, but at around 10,620, again, if you're chasing momentum, that perhaps is not working. Tin plates numbers flashing on the screen. Now, the stock has had a big rally, keep in mind, and this has been the theme with some of these metal companies. So, net profit of 28 crores versus 11 crores looks quite good. But see the 6-month or 12-month chart of tin plate. It's been one of the best performing stocks as well. So, just put that point also on record. Over the last 1 or 2 months, there's been quite a bit of buying. But let's do one thing. Let's get an insight into dealing room chatter then. Nimesh is here with Trader Talk. Nimesh, what's the feedback today? Once again, at high level, there is some bit of profit taking.
Yes, Anuj. In fact, you know, the sense is that maybe the Nifty is at a very crucial resistance level. So, next few days will be very critical because of the expiry as well. You know, for a meaningful breakout, you need good participation from across the board, which is lacking even in today's trade. So, even today, you have a selective rally in Reliance. So, the private bank names which are rallying in trade today. But largely, if you look at on the sell side, you know, metals are a bit out of shape. So, clearly, you know, the full round participation is not something which is clearly visible. Even in terms of flows, again, it's a mixed day is what I understand. So FIs are again on the net sell side. So you probably see a net sell figure from the FIs in today's trade. Even in the mid cap and small cap, for the last many days, the feedback is that the super HNIs seems to be selling into the mid cap and small cap. So that again seems to be playing out in today's trade. So watch out for expiry this week. That's going to be very critical. In terms of buying, again, you know, pharma is one space where there is some bit of buying coming back, and that seems to be the sector to watch out for in the days to come. But again, you know, we are at the very close of the resistance level. If you don't, you know, cross that 10,600, 650 decisively, again we'll pull back. So it's been the range, but largely the focus should be back into the pharma names because that's where some bit of institutional buying seems to be for the last few days.
All right, Nimesh, thank you very much for that. Well, on that note, let's say hello to Ashri Shankar, Head of Institutional Equities at Prabhudas Leeladhar. Shri, thanks for joining in. You know, your thoughts on metals in specific. I mean, the reason I'm asking is that, you know, the evidence is now coming through, for instance, in a company like Tin Plate. We always knew numbers were supposed to look smart. How would you play metals from this point onwards? Is the best of the rally behind us? Or can someone still take new positions?
See, we have a strong recommendation in JSPL. JSPL is one of our topics, and it continues to be one of the good stories that we find great value, a great story in terms of performance in the metal space. Then if you go back to specific, when you mentioned tin plates, etc., this is one particular product segment which you are speaking about. While our analyst has been optimistic on the entire the segment, the way some of the aluminium stocks have rallied, aluminium as a commodity has rallied, we have taken off Hindalco from our topics, etc., which is not a fundamental base, but more event news driven for a specific reason some of these rally has happened. However, having said that, JSPL continues to be a fundamental story as a topic.
Okay, Shri, hi, good afternoon. The
Good afternoon.
talking point today has been Reliance. Your thoughts on that stock?
Nothing specific about it, and in fact our entire thought process on the market is we think it is going to be a 10,500 as a range which will be difficult for it to move up. It has moved to 10,600 plus, and I think I continue to believe that there is going to be more resistance out here to break these levels and go. That's basically because, you know, once you start looking at the earnings forecast for FY19 per se, probably the earnings is going to be a bit of an issue out there in terms of how much you will pay for a 1 year forward earnings. From our own estimates, you know, 1 year forward earnings, it is at around 18.9x. already, which is much above the 17.2x, which is a 10-year average. So if you ask me, do you find this market extremely cheap at this stage, or a great what do you call value stories, or do you find in the marketplace? Answer is no. The market is going to be a bit toppish. So we tend to believe that at this stage, from a fundamental point of view, you don't think that the market has got a huge upside potential in the near term. That's number one. And number two, why this has happened, and if I actually look at it, one of the bigger stories have been around in April 17, when I had made an earnings forecast for March 18. For the 34% growth was actually coming from a segment like banking in the Nifty. At that 34% earnings growth has actually turned out to be the current forecast a 7% contraction in earnings for the banking. And mind you, BFSI is 37% of the index. So with that huge weightage in the index, and if you see that entire earnings contraction happening, that's for the good stories, good earnings coming from all the HDFCs of this world, etc., HDFC banks of this world, etc. The kind of provisioning, kind of increase in NPAs of most of the PSU banks, plus Axis, ICICI Bank put together, the stress levels, that's actually bringing it down. Now, if you start believing that, where the story is going to change, to my mind at least, is when we start looking into FY19 earnings and beyond. And if I start believing that, probably once this fourth quarter FY18 results are announced, where you will see huge amount of slippage will happen, especially in some of the banks which has got large amount of restructured loans. When I say restructured, that includes your standard restructured S4A, 525, etc., etc. All those different RBI dispensation included. Once that is done and dusted, then you will actually start seeing from next year onwards, the recoveries will be higher than slippages, and that's when you're going to see a lot of these underperforming banks probably getting a relook at this stage.
Okay, well, just about 3 minutes to go before the day goes out. It is turning out to be a little difficult on the Nifty to hold on to those levels. Individual stocks are still spiking. MEB Infra, for instance, on the mid-cap horizon is suddenly shot higher. Just a call, Ashwani, perhaps on Mahindra and Mahindra. Fresh highs, continue to see buying, though though overall the Nifty seems to be getting into that sluggish patch.
See, these are stocks which are coming out of massive bear markets. Mahindra and Mahindra did nothing for 2 years. So definitely there is, I think, fresh allocation which is happening here. So my sense is at some point it will become, probably a 4-digit type stock. So that way on all declines, we should be buying into it, not immediately, but any declines, say towards 800 thereabouts, you should buy.
Okay, all right, 2 minutes to go before the day goes out. So, Anuj, how would you classify this? I mean, some underperformance from mid-caps. Once again, not quite able to take out that hurdle, right?
Yeah, Ashwani and me used to discuss this Mario theory where, when we go so close to important resistance, if you played that game.
Super Mario,
you bang your head against a wall, and sometimes, you need that power of that mushroom and then you have a big run and then you jump. Perhaps
today, if Reliance were to be that mushroom, we thought we had that power.
Yes, you
work.
You thought that was the case, but not to be, at least for one more day. But it's imminent, right? I mean, it's very close to that mark. But anyway, let's talk about the stocks that moved. Of course, Reliance was the one that did the heavy lifting today. That was up about 3.7%. Perhaps was your stock of the day from the index. Apart from that, ICICI, HDFC, Larsen & Toubro. So the biggies rallied today. Yes Bank as well, up about 3.5%. That stock did well. On the way down, Hindalco was down 7%. And of course, Vedanta and Tata Steel were also down. And IT was down. Infosys, HCL Tech, Wipro, Tech Mahindra, essentially profit taking after the phenomenal move.
Yeah, I was looking at stocks like NIIT Tech beyond the index as well, Anuj, because that profit taking on the large cap side, that continued on the mid cap side on the IT universe as well. So that stock's down about 4.5% as we speak. In fact, quite a few of the other stocks, NIIT, its parent, is down about 2.5%. Something like a Lemon Tree that's had such a breathtaking journey since its IPO. 2.5% lower there as well. Speaking of the losers today, because the mid-cap index has ended negative, the entire ADAG pack has been under pressure. Reliance Naval leading that list with a 13% drop. Reliance Capital, Reliance Communications, most of those stocks have had a rough session. Of course, Nalco met the same fate as Hindalco, so we're talking a 7.5% decline on that stock. Quality, which is such an erratic mover in this market, 6% down today. Mishra Dhatu is 5% down circuit, by the way, today. Then some weakness on a JK Tyre, about 4.5% on the downside. Minda Corporation losing some of the gains from yesterday. So this is where the weakness was. However, having said that, you've got to look out for the logistics side of the market. It's been breathtaking. Gati on a 20% circuit, Patel Integrated on a 20% circuit, Snowman Logistics 15% higher. Maybe we can get TCI Express on the screen as well. Last time I checked, even that stock was up in smart single digits. So that's been the logistics story. ICICI Prudential, definitely the stock of the afternoon on the results. So we're talking about a 9.5% up move. GNFC, good results, 7.5% on the upside as well. So these are some of the names that really stood out because of the earnings reactions coming through. Coromandel was a negative earnings reaction, so 11% down on Coromandel. Delta Corp lost its mojo. Of course, numbers were great, but perhaps it was a sell-on news kind of situation here towards the afternoon, losing about 1%. Alembic, because of the fact that there are no observations from the US FDA on their plant, closed out positive. Buying on India Bulls Ventures continued. So these were the names on the upside. But absolutely flat on the mid-cap index. It's just about a 1-point decline for the index, that is.
Well, yes, and you know what, we must credit Nimesh for this, big logistics move. I think he was the first to alert this morning. It would have got missed. The fact that, Gati was perhaps looking at something like a move on that, and these stocks have done nothing practically, and just that one news was enough to fire the entire sector 20% higher. Let's take some final thoughts then. Ashwani, so will we need to have a gap up to sort of take out this resistance, or you reckon that we are almost there in terms of breaking out?
See, the Nifty was basically 50-point range, and the Bank Nifty was hardly, maybe like 150, 120 points. So that way, the market is really compressing, and chances are you will get your gap up sooner or later. So my sense is the breakout is imminent. We've already had many days of sideways movement. Sometimes breakouts are slow, sometimes they happen with great force. I think the breakout, because it's slow, it's not able to pick up traction. But if you get some sort of announcement or macro trigger, then I think a lot of short covering will take it higher. The large stocks are all positioning in the right manner. The breakout seems to be happening on the upside more than the downside. So you know which way to go. Now the day we open with a 50-70 point gap up on Nifty, I think that's the day you could see follow through.
Sri, before we let you go today, any mid-cap themes immediately coming to mind? I mean, for instance, this whole logistics rally that's happened, would you back something specifically? There's an Alco Beverages rally going on, logistics, I mean, different themes playing out.
No, from JSPL is a part of a mid-cap stock in the metal story, then Tata Steel in the large caps, and JSPL in the mid-caps side that we is a story that we have been playing to.
Well, there are lots of key earnings to watch out for. Telecom major Bharti Airtel is going to be reporting fourth quarter numbers today as well. And it might not be a pretty picture. In fact, Rima, we're looking at a loss.
Well, you could see a loss this time for Bharti Airtel, and this will be the first in many, many years for the company. And the stock seems to be reflecting that. It's down 25% on a YTD basis since the peak level of 565 that the stock hit in November. It's already fallen close to about 30%. So numbers not great. Revenues down on a consolidated basis, which includes their India Wireless, Africa, the India D2H business, etc. So revenues down nearly 3%. Margins could come down from 37% down to 35%, and there could be a loss. Now, the range on the profitability or on the bottom line varies. So Kotak is expecting a loss of close to 375 crore, while Ambit says there is a possibility for mild profit. But on the whole, for the India wireless business, you should expect a weak quarter. In fact, for Bharti Airtel, their India wireless revenues have been declining for 7 straight quarters now. Q4, this quarter will be weak for the industry on account of one, Jio had cut tariffs in January, and most of the telcos, including Bharti, had followed suit and cut and lowered their tariffs. Secondly, the international termination rate was lowered. And thirdly, incumbent players as well as Jio have been coming out with lower and lower value packs, more bundled offerings, as a result of which the average revenue per user has been consistently falling. So for the India wireless business, on the back of these factors, we're expecting the revenues to fall by about 6%, with the margins coming down by 250 basis points. The average revenue per user has been consistently falling. It used to be close to about 190 to 195 when Jio was launched, and now it's expected to come in close to 115. Subscriber numbers will continue to be strong, as well as the data business, but it will be overshadowed by the weakness in the India wireless. Africa has been growing well, but Q4 is seasonally weak. The street will also watch the D2H segment, and if Jio does a commercial launch, is that going to follow the wireless way, will also be closely tracked.
All right, Rima, thank you very much for that. Well, let's now move on to a CNBC TV18 exclusive. We're learning from sources that Essar Steel's Committee of Creditors is going to be holding a meeting later today. Ritu Singh is joining in to tell us what is lined up. This is the big one, Ritu. So what are we expecting? Of course, the old bidders get to sit at the table as well this time, right?
Absolutely. I mean, it's a new lease of life for both U Metal and ArcelorMittal, whose bids will be considered by the COC. This, of course, comes after the NCLT had directed the resolution professional and the lenders to revisit their decision to disqualify both of these bids in the first round of bidding for Essar Steel. Now, both of them will be given a 30-day cure period to cure their default per se, that is, repay dues if they are to be eligible. New Metal, in that case, Revant Roya, because of being a related party to the promoter of Essar Steel, will also have to take care of the dues on that front, and ArcelorMittal will have to repay dues of Uttam Galva and KSS Patron if it is to be considered. There is a third option where, JSW, of course, is one of the players that has reached out to the lenders asking that it is still interested in submitting a bid. So if the lenders do open a new round of bidding, players like Vedanta and JSW could still come in, but that seems unlikely at this point of time. Of course, more decisions are likely at the end of that meeting, and we'll keep you posted.
Okay. All right. Thanks, Ritu, so much for that. Well, speaking of deals, this is going to be a big one. Now, as the buzz of a deal between Walmart and Flipkart gets closer and louder, sources are telling us that the legendary founder of SoftBank, Masayoshi Son, has met with Walmart's global CEO to finalize contours of this deal. Remember that SoftBank, with its 20% stake in Flipkart, was holding out for a better offer. Kritika Saxena joins in with more details on this one. Kritika, what are you learning?
So, as Priya and Ron had reported a few weeks ago, it is in the last stages. The deal is likely to be concluded within this week or the next week. And as far as SoftBank's 20% stake is concerned, SoftBank was playing hardball. They were negotiating on the price, and we understand that they have agreed to at some specific price. We don't have the exact amount yet, but yes, Son, as you were pointing out, has met the global CEO and president of Walmart, Doug McMillon, and decided that they will jointly come to a certain decision very soon, and we understand that 10% is likely to be sold off by SoftBank. They are keen on staying invested in Flipkart, so Walmart is going to be talking to SoftBank very closely. They have come to some kind of an agreement with respect to integration, with respect to what lies ahead, with respect to India plans. So SoftBank is not going to be exiting for sure, but yes, with SoftBank on the table now, the deal between Walmart and Flipkart becomes even bigger and is definitely towards the last round. Just to put some perspective over here, it's a majority stake that is going to be sold. 80% is what has been reported already, and pretty much all the investors, which includes Nasper, Tiger Global, several other investors that are there, a portion of the founders will be exiting a part or complete stake, and the only players that will remain invested is China's Tencent and one of the founders who is likely to retain about 5% stake. But no official comments, and perhaps next week we should have something clear.
Okay, all right. Well, we're not done with the story just yet. Now, with SoftBank willing to sell a portion of its holding in Flipkart and the deal looking like it's getting closer to the finish line, Walmart is already working with consultants to chart out a detailed integration plan after the acquisition of Flipkart. Priya has more details on how this could look like. Priya?
Well, absolutely. In terms of the integration, there is already some momentum as far as the merged entity is concerned. Now, what we do pick up from our sources is that Walmart is likely to have appointed Bain & Company to be consultants as far as this deal with Flipkart is concerned. There are also other global consultants that the company is working with as far as strategy is concerned. But here's what the consultants will be doing. They're working on formulating a potential management structure for the merged entity. We also understand that they're looking at several aspects and drawing up scenarios as far as the board composition is concerned, different operational structures of entities as well as the consolidation as far as verticals are concerned is also being looked at. Other important issues like supply chain, cost efficiencies and logistics related issues are also being ironed out, and a scenario is also being set up as far as these issues are concerned. Now, we did reach out to all the companies. Walmart did not want to comment as far as our query is concerned. Bain & Company said that as a matter of a policy, they cannot confirm or deny who may or may not be their client, and Flipkart did not respond to our email.
Okay, all right. Thanks, Priya, so much for getting us the latest there. Let's move on to a different sector now. The government has set an ambitious target to make 24/7 power available to all households by 2019. However, data compiled by the Power Ministry is projecting a dismal picture as of now. At least 5 states have witnessed power outages for more than 10 hours in the month gone by. Anshu is here with the report card. Anshu, what do the numbers say?
Power Ministry has compiled the data for average power cut across India with the input from the states. Average power cut in India is at 5.13 hours compared to 6.1 hours in March 2017, and average power theft is at 23% compared to 27.3% in FY17 March. Remember, these data are only for the urban areas in India. The least number of hours in terms of power cut is seen in Delhi. Remember, Delhi is run by private discoms like BSES, Yamuna, Rajdhani and Tata Power Delhi Discom. The least power cut in FY18 was seen at 0.06% compared to 0.1% and 0.14% in FY16 and 0.4% in FY15. The worst states in terms of number of hours of power cut average in the month of March was seen in Jharkhand. Ironically, Jharkhand has a lot of coal, but it has seen 45 hours of power cut compared to 38 hours. The Haryana at 18.4 hours, Chhattisgarh at 16 hours, and Uttarakhand at 14 hours, and Manipur at 12 hours. And in terms of states performing well and least number of hours in terms of power cut, Maharashtra has seen 51 minutes of average monthly power cut, and Sikkim at 52 minutes, and Gujarat 1.3 hours, Goa at 2.3 hours, Andhra Pradesh at 2.4 hours. And in terms of power theft or losses, UP tops the list with 35% against 40.3%, and Maharashtra at 22.7%, Madhya Pradesh at 31.9%, Rajasthan at 25.4%, and Karnataka at 15%. Considering that 24/7 supply is the target of the government by April 2019, the state discoms will have to fare well. Back to you.
All right, Anshu, thank you very much for that. Moving on. Railways arm that will be implementing the ambitious station redevelopment program for 600 stations would be raising close to 2,000 crore rupees from the markets to kickstart this first phase. In an exclusive conversation, the MD of Indian Railway Station Redevelopment Corporation told us that 2 stations will be redeveloped by January 2019.
Well, first of all, I would like to correct the response was not a tepid response. In fact, the PPP bids for Anand Vihar and Bijwasan, which we had invited. For Anand Vihar, we had 8 parties who had pre-qualified. And for Bijwasan also, I think we had 8 parties which had pre-qualified. For Surat, we had called the RFQ, and again, 6 parties had pre-qualified. Anand Vihar and Bijwasan, they ran into some problems as far as the land monetization aspect was concerned, because the land given to us by DDA was on lease. And the lease conditions said that you cannot do commercial development. We had requested Ministry of Urban Development and DDA to change the lease conditions. However, that attempt did not succeed. And since the land was given to us on lease because of a cabinet decision, so we are now going to the cabinet for transferring that land from leasehold to freehold, so that we can do commercial development, do land monetization, and take up these stations. However, what we found that we have to work at 600 stations, and the number of parties, if you take airports also, only 5 airports presently are on PPP. So other airports are all done by airport authority. So definitely there is a limitation on the number of parties which are there who are infrastructure players, and those infrastructure players who are having money also to invest. So that is limited.
But then coming to the EPC model itself, you will require funds in the beginning. It's not as if revenue will start coming in at day one. So are you looking at approaching the markets? Are you looking at borrowings as far as your arm is concerned? Because Railway has left it up to you how you go ahead and remodel these stations.
Essentially, what is planned is that this entire exercise on a basket of projects over a period of time should be not only cost neutral, cost surplus to railways. So we should be able to earn for railways and give back to railways. So what presently the talks are going on with Ministry of Railways is that Railway enters into a BOT NVT agreement with our company IRSTC, and based on that we raise loan from the market.
How much money will you raise from the market? So for instance, this fiscal?
This fiscal, the requirement may be only about 2,000 crore, but overall for these 50 stations, maybe around 5,000 crores we might have to raise from the market. So all that will depend, because ultimately we might even be setting up an equity fund, a global equity fund. So we'll have a global auction for setting up that equity fund.
Let's chat commodities now, and precious commodities at that, because while of course we keep talking about gold and silver and diamonds, but there is more than just that when it comes to jewelry. It's emeralds and rubies as well, which actually is more expensive and more in demand than diamond. Let's get to understand more of that from Dev Shetty, who's President and CEO at Fura Gems, and he joins us on the show. Dev, hi, good to have you. Well, tell us on what really is the Indian market share and spend when it comes to other precious stones, because we rarely talk about emeralds and rubies. So what is the kind of number that we're talking about here?
In terms of the India market, India plays a very important role in our segment, predominantly because the East, dominated by the India, catered to 60% of the market share for us, and India particularly has got 20 to 25% market share. What we are trying to do is basically, as we are developing the emerald market in Colombia and as we are developing the ruby market in Mozambique, we are also trying to start marketing the product. And as I said, India takes 20 to 25% market shares. We will be setting up a marketing office in India where we'll be starting promoting the emeralds and the rubies in the Indian market, educating them, building the whole transparency leg, and informing them about the intrinsic features of the product that we provide.
You know, as we were talking earlier, Dev, you mentioned to me on how you were looking at the mining sector and business in India as well. So what areas have you set eyes on, and how easy is it really to get into that sector in India?
It's been evolving, I would say. I think it's not the first time I'm looking India in the mining opportunity. I've seen in the past. Obviously, I was not that successful. I think in particularly last 4 years, there has been a lot of positive sentiments as far as the mining segment is concerned in India. Particularly the mine that we are focusing, the diamond mine in Bunde. We believe it's a world-class mine we can develop into. The government has taken all the right steps. They have called a request from all the interested participants. They've asked for suggestion, opinion. There was a round table. And we are seeing evolving, and I think that's a good thing, that we are seeing that government is seeing a participation from the national and the international players, and the fact that they are open for suggestion gives a lot of comfort. The time will tell. I think we are just waiting for the tender document to come out, but I think the government is going in the right direction.
That is good to know. But also, what is your sense on the Indian demand growth for the colored gems? Because we've seen that there is number available for gold and silver. For the other diamonds and etc., what is the growth number that you've seen?
Oh, it's incredible. Like, you know, I can sum it up. The demand in India is like, even if I increase my production tenfold, I won't be able to meet the demand. I have seen in my last 10 years of mining and selling. Look, I have sold in my lifetime $650 million of rough emeralds and rubies. And I can tell you, like, if I increase that demand 3 or 4-fold, I won't be even be able to meet the Indian demand. And that is purely because India has always been rich in color. Color gemstone has always been the product that they have been aspired for. The biggest challenge has always been there has never been a consistent supply. There has never been a consistent story. There has never been a transparency, and that is what we did all along in my old life, like 10 years ago, for the last 10 years, and that is exactly what we believe we are going to do in Fura Gems, is to build the segment again and market it the whole ethical route to the market. In terms of the demand we see has been growing like 40 to 50% annual year on year, and we see with the increase in supply, the prices that the retailers are achieving, the consumers are ready to give are much more, and the 40 to 50% base you may sound is very high. That's also because we are coming from the lower base, but I believe it will stabilize over the period of time, like 15 to 20% still year on year. That is purely because in this era where millennial wants a lot of new product, we at Color Gemstone are the new kid in the block, and with consistent supply, the millennials are accepting and they're ready to pay premium for that.
Oh, well, absolutely. Just before we let you go, Dev, educate us on what is the kind of sense of value when we look at these precious stones. So where do diamonds stand? Where does sapphire, emerald, ruby? How would you put them in that pecking order on what is most expensive, and how do you climb down that ladder?
Oh, it's always been on the top, and this is where the education plays a very important role. That if you see a matrix of all the auction pieces, whether it's Sotheby's, Sotheby's and Christie's, the right at the top comes color diamonds, which sits right at the top. The next one is ruby, then sapphires, then come white diamonds, and then comes emeralds. So in terms of investment value, even if you sit on the gemstones, on emeralds or rubies in your portfolio, the value is just going to increase year on year. And in terms of aspiration and the demand, and I think because we'll be supplying consistent in the future market and in the future way, I think the consumer would always get something new as they go along. I think from the aspirational point of view, I think the consumer will always demand color. It's always the issue in the past has been the less supply, and we are pretty sure we'll bridge that gap.
All right, look forward to that, and look forward to talking more to you, Dev, about all of these other gems as well. But thank you so much for joining us though today and giving us a sense on what really Indian demand is when it comes to all of those precious stones.